Hey there, traders, and welcome back for episode number 134 from the StockBandit.tv. Now, it's a very interesting time in the market right now. We've really seen a lot of recent volatility, and as we head into a brand new week of trading, it's time to once again examine the major averages. We know that's what's going to impact and influence the movement in individual stocks. And so for you and me as traders, this is where our trading week begins. Now, last week was a holiday shortened week, if you'll recall. Market was closed on Monday. We opened up with some weakness on Tuesday, which really was followed quickly by another, quick reversal to the upside on Tuesday. We got some follow through on Wednesday for the first time in quite a while. Take a look at these back-to-back up days on the NASDAQ. First time in several weeks, going back to early May. But that was completely erased with a downside gap on Friday, which never was filled, and some ultimate continuation throughout the session on Friday, leading the NASDAQ lower by 3.6%. So pretty wild week to say the least. We did finish lower across the board due to Friday's weakness, and now at this point we're now heading back towards some key support zones that have been in place for the better part of the past month. Now, for the NASDAQ, the May 6th low is at the 2185 level, and that's really been undercut a couple of times, yes, on an intraday basis, but it has held each time it's been tested on a closing basis. Now, we are approaching that pretty quickly due to Friday's weakness. We're now only about a 1.5% from that level, so that's going to be the zone I'm watching in the days ahead. So we've got very well defined closing support down here. We also have some pretty short-term resistance that's been very clear here, right around the 2300 zone. So this is really the area to be watching in the weeks ahead. 2185, 2300. If we do move decisively lower through the 2185 level, then this February low is going to be the next spot I'm watching, which is right at the 2100 level. We really need to see an increase in volume here. Day-to-day volume lately has been extremely light. We've also seen a notable absence of strength in terms of upside volume. So days when the market is rallying, we're seeing very light volume. That really shows very limited conviction on the part of traders for this market to move higher. We're also still stuck in this mode where we're still seeing lower highs in place. So the short-term trend is down. This market is still struggling to bounce, and yet we still are kind of respecting this same support zone. So it's going to be a very interesting week ahead. I would suspect that we get a pretty decent move one way or the other, possibly both, if last week is any indication. For the S&P 500, 1065, that's the May 6th low. It was closed on, and it was broken on a closing basis on Friday's sharp sell-off. This index also saw a pretty big spike in volume as well, brought it back up to about normal levels, which haven't been seen for more than a week. Below this 1065 zone for the S&P 500, we've got the 1040 low that was set in May. We also have the February low back at the 1044 level. So here again, we need to see some better upside volume if this market is going, if this index is really going to rally from these zones. But for now, it looks like this thing is starting to break down here, and that certainly spells caution if you're a bull. For the Dow, this index is now sitting right near this very key support from the May 6th low, which really coincides with the February low as well. So we're kind of right in the same zone here. It's going to be very interesting to see if this index can hold about the 98.70 to 98.35 zone. Now that's only about a 35-point zone, but that's certainly not much for this index. So big decisive move lower, nice spike in volume as well. So this is not a spot to be really buying aggressively, particularly if we see that level get broken early this next week. Now finally for the VIX, this is the fear index, and generally when fear is rising, people are already doing their selling in stocks. So if they're concerned that prices are heading lower, they've already moved on that hunch and they've already sold. So generally the VIX will tend to top out at market lows. However, last week and in recent days we've seen this thing really find support around the 2950 level. That provided a pretty nice lift on Friday as this thing ramped higher by some 20%. So it still has plenty of room to run higher. So we need to keep a close eye on that as well. But it looks like fear is still in the air, and that means that people are still looking to sell stocks, and that's something certainly to consider. We need to see fear subside before this index is really able to kind of stabilize, and that might require an upside spike for this index to possibly challenge or breach the recent highs. So that's what I'm watching in the days ahead. Thanks for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.